Good morning, everybody, and welcome to this week's Motor Trade Radio podcast in association with eBay Motors Group. It is Saturday the 20th of June, and you're joined by myself, Philip Nothard.
And me, Curtis Hutchinson. So we've racked up episode 359, Phil.
Where are the weeks going? Where are the days going?
Yeah, I think 360 might be cause for a minor celebration.
Yeah, there's lots going on in there at the minute. I mean, we've got packed headlines this week, and we've had to be very selective on the headlines. You know, we've got showrooms obviously have been open now across England, followed by Ireland, and then Wales, and now Scotland have now got confirmation of this Monday. So some big operators up in Scotland that will be welcoming the fact that now they can open the doors and start welcoming some customers in and doing some business now.
Yeah, they must be absolutely chomping at the bit, and there's certainly been plenty on LinkedIn this week. I know some Peter Vardy were posting a number of updates on what they've got in place in their dealership, so they're all raring to go. So I'm sure Monday can't come around soon enough for them.
No, I get, and you know, we've had that interview with Mike Jones earlier in the week from who's the chairman at ASE, and obviously he was talking through some of the, albeit reduced, dealer composites for obvious reasons through lockdown. But you know, he was talking through some of the April, May, and then the June trading results in the sort of early weeks of June, and he did share his views on sort of what people should be thinking about as the head towards Q3 and Q4. But again, you know, it actually, as you're referencing there with the Scottish dealers and chomping at the bit to get back to some sort of normality of business. I mean, you know, when Mike was talking through some of the numbers and the results for lockdown, and every week, every day is lost, isn't it? Lost revenue.
Yes.
So, you know, Scotland coming on at the back end, you know, it's impacted them harder, hasn't it?
Yeah, it was. The interview was a bit of an eye opener, and it is at the end of this show. So do stay tuned for that. But Mike shares his insights on where dealers are at the moment, how June is looking, and also how to best approach Q3 and Q4. And he also touches on the scrappage scheme. So there's a lot in that interview.
Definitely. So we've got some good headlines this week with lots of activity and some from key people as well, talking about what their views are on the market.
We've got Ford's boss lifting the lid on what the lockdown looked like for the market leader. We've got car supermarkets seeing a brisk start to reopening. We have a major fleet player, ALD, launching a direct-to-retail service. VW Group is eyeing Europcar again, and move over Dieselgate. Here comes Petrolgate.
Yeah, so there is a lot going on, but the one that we're going to open up with this story actually, which is, it's not necessarily COVID related according to the story, but this is in AM Online, and this is Mercedes Benz Retail Group closing 3 of their London businesses, and it's been reported that Mercedes Benz Retail are closing their businesses in Bromley, Caterham, and Caterham, and Chelsea, as part of a realignment across their London market territory, aren't they, in this? And they do say that it's not as a consequence to COVID-19, that this was part of a pre-COVID-19 decision to realign their businesses.
Yeah, and I guess the trouble is that any announcement like this at the moment, everyone's going to think, oh, it's because of what happened during the lockdown. It's as a result of that. But they make it quite clear to AM that this was a decision that was made beforehand to close these facilities. And they also go on to say that they've recently opened a new flagship site in nearby Dartford. A new after-sales site is being built near Heathrow, and there's also Brentford Mercedes Benz in the process of being redeveloped. So there's activity there within the group, but these hard closures, and they're closures in fairly key areas, south of London.
Yeah, and you can understand it. They say it's not just purely exit, because they say they've invested elsewhere. So again, there is a comment in there from them saying that the world is changing fast, and so are the needs and the wishes of many of their customers and the expectations of their customers. So they do have to think differently, do different things. They are looking into other areas, other pop-up stores, lifestyle focused Mercedes, me stores, events, conferences, etc. So quite an interesting change to their structure, isn't it?
It is, yeah, and let's not forget they're also having a big push on online retailing. So that'll all be part and parcel of this as well.
So sticking with the manufacturers, and a very, very comprehensive story here in the Telegraph, and this is from the Ford boss, who talks around the car industry is worth 44 billion, and we need to get UK PLC up and running again. And this is Andy Barrett, and he's talking about. Actually, the paragraph is Andy Barrett is juggling many balls as he contends with the COVID-19 fallout, brand consolidation, and the inevitable new car sales problem. So he's quite open and transparent in terms of his views on the market in the UK, isn't he?
He is, yeah, and if you can get past the Daily Telegraph paywall, it is actually a really good interview. It's very detailed and it's very wide ranging. And it's actually written by Tim Kirk, who many listeners may remember as the former editor of the IMI magazine, and he does put some really good questions to him. And it covers, as I say, it's wide ranging. So it covers manufacturing all the way through to retailing, and there's some interesting observations in here. Andy Barrett's talking about Bridgend, and the plant closes in September. We know that, and I guess what many people may not realise is that it was always looking vulnerable because it was making petrol engines for LCVs, and of course that's a dying market. But interestingly, Andy Barrett is confident in the future of Dagenham, which is solely producing diesel engines, because he's saying that diesel will dominate the CV market for the rest of the decade, which I think he's absolutely right. There is no alternative at the moment. The EV technology is not there to rival diesels in commercial vehicles. So, let's hope there's some longevity there for Dagenham.
Yeah, and they do talk, obviously they touch on the coronavirus, the sort of levels of furlough and the impact of the coronavirus. But again, similar to the previous story, a lot of this was pre-COVID-19 in terms of their strategy across the UK networking particularly, and across Europe. But they do cite in the story that in February it announced a plan to reduce physical points of sale down from 400 to about 160, and Andy Barrett claims that nearly 9 out of the 10 will be within a 40-minute drive of a Ford dealership, and the distance that the people will drive to the purchase a car. So they are looking at this whole network structure for Ford, aren't they, in particular the UK and the European markets, and quite open and transparent about what their plans are and why they're doing it.
Yeah, and digital does loom large in the way that Andy sees the business going forward. And there's a quote from him saying the opportunity to convert the 7 million mostly physical vehicle transactions to digital is huge. And this also removes a lot of the distribution costs. So you can see where Ford is coming from. Yes, they are slimming down the network, and yes, they can save an awful lot of money in distribution.
Yeah, I mean, he was quite. I mean, he's been fairly vocal as well, hasn't he? That the head of the story around that kickstart of the industry, particularly in the UK, and we mentioned it last week on the podcast, and I think we talked, as you said right at the start there, we talked to Mike Jones about it from ASE around this sort of stimulus for the UK automotive sector, and Andy Barrett does talk about that the UK automotive sector is worth 44 billion overall, and end to end employs about 1 million people. And goes on to say that one of the quickest ways to kickstart the economy and to get manufacturing moving is to stimulate the economy in whatever way possible. So he's quite vocal that the UK government do need to get some sort of stimulus in to get the automotive sector going again very quickly and sooner rather than later.
Yeah, and he does actually comment on June trading. So he said that the brand enjoyed an early spike of customers, but it has now flattened out. And he compared the effect to a cork out of a bottle. And I think that's what we're hearing a lot, from some of the reports that we ran last week, that there was that early surge, pent-up demand, and maybe it's starting to level out now. It remains to be seen.
Yeah, sticking with that, the next two stories from the supermarkets there. First one in AM Online, and this is Imperial Cars poised for record-breaking return to car sales in June, and that's Neil Smith, who's the operations director there that Imperial Cars, talking about obviously the level of traffic and the activity during lockdown, and the level of inquiries as the doors open for business in terms of the click and collect side of things and what they've done. And I know recently he's been on one or two webinars, fairly open and transparent about some of the systems, some of the activity, how they've realigned some of their colleagues and staff to how those are operating within the business to adhere to new regulations and new processes, and to get through some of the heavy volumes of inquiries that he reports are coming into the business.
Yeah, with website traffic up 80% since the 1st of June, and that's when all 17 sites across the Imperial Cars network reopened. And as you say, click and collect and contactless sales loomed heavily in the reopening, and a lot of the promotions they were doing around their buy now, pay later finance offer.
Yeah, there's what about timing, eh? He talks about the Imperial Cars opened its 17th car supermarket in Birmingham just days before COVID-19 lockdown period got underway on the 24th of March there. So you just wonder how they handled that. Just ready to open and go live, and then all of a sudden the business is shut down within days.
Yeah, although interestingly, the story does say that the site is on course to hit turnover of £300 million in the current financial year.
So sticking with that then, and going over to, I'm not sure if this is a debut on the podcast or not. I mean, I know the guys over at Motor Trade News, but we've got a story here within Motor Trade News, sticking with the supermarket, sticking with the pent-up demand, and this is about Trade Centre Wales, and they've reported having queues outside the door on the opening day of following restriction lift for Trade Centre Wales.
Yeah, you're right. So this story from Andy Coulthurst, who runs Trade Centre Wales. So they're saying that they sold 145 cars on the opening day in Wales, which was on the 8th of June. So that was a week after England, and that was across 3 sites. So the business had actually launched an emergency car clearance campaign, which it had done in the England sites that had already opened, but that offered up to £3,000 off every car, and no car was reduced by less than £2,000. So you can kind of understand why buyers in Wales were queuing up at the doors.
Yeah, and it's all this pent-up demand, isn't it, that's gone on. And they were, I think there was quite a bit in social media where they were sort of promoting the the opening deals, and as you say, they're citing the discount offers that they were wanting to get the business going as quick as possible. So again, referring back to the Andy Barrett story there, the question is how long this will last for. Mike Jones again in the recent interview was obviously talking about capitalising whilst you can. Covering lost revenue through sort of April and May, but leaves this big question of what will happen in for the remainder of the year. How long can the pent up demand continue, and how quickly can the government come up with some sort of stimulus to support the sector is the big question on everybody's minds at the minute.
You're listening to the Motor Trade Radio podcast in association with eBay Motors Group, the only weekly podcast serving the car retailing sector, and available online at motortraderadio.com and by subscribing on Apple Podcasts, Google Podcasts and Spotify.
So nipping over to Europe a little bit here. So looking at a story in Fleet Europe. This is, as you alluded to at the start of the podcast, Curtis, that ALD car market now also does B2C. So this is kind of things that have been talked about for some time around the changes from some of these operators into more of a B2C business from a B2B, and this is talking around ALD's distribution channel for its ex-lease vehicles is extending its reach, and they now from now on ALD car market will not only offer used vehicles to professional traders from a B2B perspective, but also directly to consumers in the B2C space. And it's part of a new phase in ALD's strategy, which also sees an intensification of its click and bricks approach, particularly in some of the European markets.
Yeah, it's a fascinating story, this. And I guess there's echoes here of what LeasePlan have already done, because they've got a B2C offering.
Yeah.
With ALD. What they're doing is they actually have 50 branded car market stores across Europe. Nothing in the UK, and within this story, bearing in mind it is from Fleet Europe, it doesn't actually say about any plans for the UK, so it's more aimed at continental Europe. But as a statement of intent, it's fascinating, because ALD are a major player across Europe and in the UK as well.
Yeah, and they go on to say that the approach is will allow the consumers to access a broad range of used vehicles to buy or lease, both online or at the outlets, and the private leasing packages will also be available in affordable and immediately available all-in-one formulas. And they're saying that it was pioneered in Denmark, and the clicks and bricks is a new one. That will now keep talking about from now on, what with clicks and bricks.
Yeah.
Approach, it's already live Spain, Luxembourg, Germany and Portugal, and it will go live in Norway in the coming weeks and be rolled out across Central and Eastern Europe by the end of the year. And then they have alluded, as you say, that the additional markets will be added in 2021. So moving fairly swiftly across that European marketplace.
Yes, and just to prove we don't just throw this show together, the next story is kind of related. So it's from Reuters, and the headline is Volkswagen explores acquisition of car rental group Europcar. So it's a speculative story, but it is from Reuters, so it's a credible source. And this is about Volkswagen Group in talks to acquire Europcar Mobility Group, the French car rental giant. And if it happens, the deal would allow the car maker to obviously better capitalise on its fleet. And let's not forget that VW Group owned Europcar before, back in 2006, when they sold it for 3.3 billion euros. So we were talking before the show, and we were sort of speculating that the price is likely to be somewhat discounted. If the deal goes through. Okay,
it's an expensive divorce settlement, isn't it? And then getting back together. I don't know. I was trying to think of the connection there. But very, I mean, this story has sort of gone across the social platforms this week, and it's more about the entrance and their sort of strategy into that world of mobility as a service, cars as a service. They're saying that VW AG are in talks with to acquire the French car rental firm Europcar Mobility Group in a deal that would allow the German car maker to better capitalise on its fleet. People familiar with the matter said on Tuesday. So it does allude that the acquisition would come as Europcar struggles to cope with the economic fallout of COVID-19, and this is where this rental market, in terms of that utilisation of a vehicle, the impact on some of the travel sector around the world, that in terms of the high demand for car rental have on that part of the sector. But it does say, as you said there, Curtis, it'll represent a reversal for VW, who sold the business and to invest in other areas back in 2006. So 14 years on, they're looking at getting back together again.
Yeah, and of course it is a perfect fit. I mean, maybe VW Group didn't make it work last time, but as a manufacturer, you've got a captive audience there that you can supply with large volumes of fleet cars across the different brands. And you get to sell them at the end. So, you've got end-to-end control of the vehicles. So, what a great fit.
And Europcar have said that they secured a package last month for €307 million finance package, and that was to help them manage their way through the coronavirus crisis, and included a €220 million loan guaranteed at 90% by the French rate. So again, they have been hit hard, and obviously had to get some borrowings in there to find their way through this crisis, and the shares are kind of reflecting that at the minute. So again, a story that we'll follow very closely, and I'm sure that we'll see something on this soon, one way or the other.
Yeah, and it is indicative of the different approaches from OEMs, from leasing companies, and indeed from dealer groups. There's new ways of doing things, and if there are opportunities to grow a business through acquiring and going into a different area with a very close synergy, then they will be explored. So we'll be seeing more of these. That's my prediction.
Will we see more of this as much as we've seen Nissan in the headlines over recent months? Nissan has appeared again in the headlines on Mail Online, and as you said there, this is about petrol now, saying that thousands of Nissan's cars could be fitted with emission cheating devices, as a law firm claims, and that they claim a document that's shown up to 100,000 Qashqais may be using the device. It's a serious claim, that, isn't it, with this one?
Yeah, I mean, this is totally unwelcome news for Nissan, and it's worth adding that a spokesman for Nissan, in response to the story, who was asked by the Mail, strongly refuted these claims. But it does follow the question mark that's sort of still hovering over Sunderland, because the assumption was that Sunderland had the green light because Nissan had closed a plant in Spain, but that's not necessarily the case. Nissan are still keen to hear what will happen with Brexit. So, and that does impact their future decisions on investment in Sunderland. So Nissan facing claims of having an emissions cheating device in their vehicles at this stage is really unhelpful.
Yeah, I mean, it's just going on, and like I say, I mean, you need to be careful and make sure it is all not any fake news, but there are obviously the spokespeople there talking that back in earlier this month that it emerged that more than 10,000 Mercedes customers have mounted legal claims relating to alleged use of technology. We know that the VW has faced it continuously over the years on the Dieselgate. I'm just quite happy that Dieselgate isn't hashtagged in this. It's a hashtag that we hopefully have now forgotten about. But yeah, it's one of those things, isn't it, that you just wish this would just now move on.
Yes.
But again, not good news, and certainly not what Nissan want to be connected to in the headlines of late with everything else that's been going on with them.
No, definitely not.
So I think there's a lot more of headlines in there. I mean, there's again, as businesses lift, we talk about Scotland now opening on Monday. Again, it'll be interesting as we start to see some of the pent-up demand performance, what are reported coming out of Scotland on Monday. Wales obviously have obviously got into the trade centre. Wales there are benefiting since the opening. We know that England have been reporting good pent-up demand, but again, back to the Andy Barrett story, they're talking about that easing off following that initial pent-up demand, and hopefully by next Saturday we will have sight of the new car figures for June, which will be a telling story to see where the new car market ended up for the month of June as well, and how much of that volume managed to get through in the month following businesses opening again. So it'd be a telling story, that one.
It will, and I think no bold predictions at this stage.
I'm not saying anything. I've had some insight into some of the areas, but I think if there's one thing I've learned at the minute is things can change very quickly in the market. So what we may have seen in the first sort of week to 10 days doesn't necessarily mean that is the direction of trend for the whole of the month. So again, I'll keep that to myself for the minute until we get sight of the final figures. I have a view of where I think it may finish up, but again, I'll let you know when I don't know the answer. But I think that's it for this week, Curtis. Great stories again, some great headlines there, and lots of reasons to head over to some of these platforms and read the stories in more detail. What an in-depth story there from Andy Barrett in the Telegraph. Very insightful, that sort of direction of trend from ALD there in terms of that B2C from a B2B in the European market. So again, lots happening, isn't there?
Absolutely, lots happening, and that we could have had so many more headlines this week, but unfortunately we've run out of time. So you've been listening to the Motor Trade Radio podcast, brought to you in association with eBay Motors Group. Do stay tuned for our chat with ASC's Mike Jones. It's a wide-ranging interview, and Mike shares his views on June trading, as we mentioned, the scrappage scheme, and key considerations that dealers need to consider for Q3 and Q4. Do join Philip and I again next weekend, and look out for the latest in our series of special interviews with industry leaders and analysts. Until next week, it's goodbye from me.
And it's goodbye from him. Hello and welcome from me, Philip Nothard and Curtis Hutchinson, to this special Motor Trade Radio podcast brought to you in association with eBay Motors Group. Many thanks again for joining us in the latest in our series of special interviews themed around the sharing best practices and car retailers as they manage their way through COVID-19 crisis. Previous interviews, as you'll be aware, have been with people from Darren Edwards from Sittner Group, Virtue Motors Robert Forrester, Peugeot UK boss David Peel, and Marshall Motors Dash Gupta. And these are still all available to stream from Apple, Google Podcasts, Spotify, and of course the motortraderadio.com website.
For this episode, we're delighted to welcome back to the show Mike Jones, chairman of ASC PLC. Good to have you back on the show, Mike.
Yeah, brilliant. It's great to be back, and thank you very much for the invite.
No, you're more than welcome. So, with showrooms now open again across most of the UK, and with Scotland hopefully following next week, there's lots to talk about in terms of current trading. But before we do, can we just share? Can you share any notable highlights from your recently published April dealer composites?
Yeah, I mean, it was an interesting one with regards to April because volume of submissions were understandably down. Lots of people had closed the dealerships. Lots of people had furloughed staff, including their account staff, and so the overall volume of submissions was lower. So I had to decide whether to publish or not. But I thought it was worthwhile actually trying to get some news out there as to, based on the information that we've got, what level of performance are we seeing? And we would normally expect April to deliver us a sort of a reasonable-ish results. It's the first month of a quarter. It's the first month as we get post March, so there's always a bit of hangover. But we'd expect sort of break even in April. Now clearly that didn't happen this year, but I think April, and with the losses that we've published, sort of just over £60,000 for the month. That's as bad as it's going to get. I mean, that was the height of the lockdown. The after-sales departments were marginally open in some businesses, or just opening up for key workers. We hadn't had the approval yet on the fact that we could do click and collect deliveries. That didn't come until May. Most people had still got their vehicle sales operations shut down as well, and we can see from the analysis that people have, the level of new and used transactions was phenomenally low in the month, as we would expect. After sales a little bit better, albeit still really quite low, but then there was some sort of compensating cost savings, as obviously people were on furlough, etc. So I'll update the data as we get more and more in, and people will effectively submit for the earlier periods. But the overall loss actually was slightly lower than I think most people were expecting. Which is good, albeit it's still a significant loss for anybody to wear, and for the whole industry to wear, particularly on the back of not hitting the March numbers.
Yeah, and bearing in mind year-on-year comparisons are pretty much unhelpful at the moment. But last year, the average profit was £5,000, wasn't it, for the month?
Yeah. Yes, it absolutely was, which is what we'd normally sort of expect in April. So that gives us, a sizable swing that we have to try and make up. Now, with a fair wind, we've got a chance of outperforming last year as we go through the second half. We've clearly got all the March vehicles that we didn't deliver in the last week of March to go at, plus the period of lockdown. So there's undoubtedly some pent-up demand there. And I know a lot of the franchises are looking for a level of catch-up over the course of the second half of the year, as we move through and we go at all those vehicles. But we've still got to make that loss back, and it's a big issue for a lot of businesses that may well see them loss making by the end of the year. Not being able to fully catch up, and we've seen that at some of the PLC announcements as to how they think it's going to go.
Yeah, and welcome back, Mike, and great to have you back on. And just touching on that point, and obviously, England opened up on the 1st of June, followed by Ireland, and then consequently by Wales. And as Kirsty's just said, we're still waiting on for Scotland to open again. But in terms of activity and market sentiment, there's a lot of media. I mean, we talked about it on last week's headline podcast around some of the year-on-year performances in the first sort of week, 10 days of June. What are you hearing from across the sector from some of your sort of dealer clients since the showrooms have opened in terms of overall sentiment and activity?
I mean, I think the first thing is that people are happy to be back at work. happy to have their business, from the business owner's point of view, happy to have the businesses open and able to trade and able to try and make some profit, because when they're closed, we've just got a bit of a cost weight. So people are naturally happy, and they're naturally looking for good signs. I mean, I think as we mentioned last time, when I was on the podcast, we always expected the used car market to go first. Out of every recession that we have come out of, the used car market has always bounced first. Overseas, that was also what we saw. Demand for cheaper cars as people are reluctant to take public transport, demand for expensive vehicles as people decide to buy themselves a toy that they have been wanting for a long time. So we expected used to bounce, and that's absolutely been the case. Plenty of people out there that I've been chatting to had record used car weeks first week back. That's continued. The thing that's putting a brake on the used car performance at the moment is their ability to replenish the stock and get cars in. Whilst we haven't got the whole ecosystem open yet, sort of auctions, logistic companies are still opening up as they start to see a level of demand out there from dealers in the first instance and customers, obviously, as we go all the way through the transaction. So I'm seeing, it's starting to tail off a bit, and people are blaming supply and the fact that they want more cars, and there's still plenty of demand. There's still plenty of people searching on the relevant websites, and traffic's strong. The key question is how long it lasts, and I think from a new car point of view, we've already seen a little bit of a dip from chatting to various people and looking at some of the brand statistics. We've seen a little bit of dip in interest from that point of view. After sales remains strong. After sales is still good, with a lot of people, particularly in advance of themselves personally going back to work, wanting to get their car fixed and get, you sort of tick off all the jobs that you've got to do that you don't want to be dealing with whilst you're actually physically back at work. So no, it's been good to go back. Some of the feedback, I think the dealers have done a great job on trying to make the customers feel safe. From a PPE point of view, from how we conduct ourselves, that's gone very well. Some businesses are still can't wait to get people back into accompanied test drives, which it sounds from Boris's announcement today that we might be closer to, albeit that I think we need to be careful and sort of watch what the customer wants on all of that, and whether they do want the freedom now of unaccompanied test drives, and how we react to that.
And do you think there's been a variance of sort of return to business? Those that may be a little bit more agile, and those against those that have got a lot of backlog to get through, haven't they? I mean, some of the volumes that some of the larger operators are talking about, sort of pre-lockdown, that they had to get through, and the volumes of staff that they've and colleagues that they've had on furlough. I mean, there's reports that some have returned quicker than one or two others. Is that something that you've heard or you've seen?
Yeah, absolutely. I mean, look, everybody's been sort of quite rightly trying to assess the level of demand and then try and react to it. I mean, we've all the way through, we've been very much pushing the fact that they need to be monitoring all the digital channels and all the customer communication and make sure they've got enough staff to get back to people there, and they're not missing out on opportunities. I mean, I think quite a few businesses have been surprised about how much business they can do using their contact center with a few salespeople or a sales manager. As we were doing click and collect as we were coming through May. So I think there will undoubtedly be a case for a lot of businesses where salespeople either aren't brought back or are brought back and moved into a slightly different role. As we get used to the way that the customer now wants to interact with us. So no, some people, a small number of businesses have tried to bring everybody back. Most people have been a bit more cautious. I mean, the one thing that the government has done in the latest pronouncements on the job retention scheme is said that if we've previously had somebody on full-time furlough, even if we brought them back now full-time into work from the 1st of July, we can put them back onto part-time working. So if there is indeed a bit of a bubble that we're through at the moment, dealers will have the opportunity to put people back on part-time furlough as we go into July and then through to October from there.
Staying with used cars, Mike, as you alluded to, there's huge pent-up demand from customers for used cars. What's your take on whether what we're seeing, certainly in those first 10 days when a lot of dealers were reporting a lot of activity increases over last year? I mean, indeed, one I was talking to said their order take was up nearly 30% year on year, purely for used cars. Now, how much of that do you think is genuine pent-up demand, or is it actual real demand?
I think it's probably going to be a combination of the two. I mean, clearly we've got, as we've gone through lockdown, people haven't been able to change cars, get cars that they wanted, and also we've had a seismic shock whereby the way that we want to work and the way that we want to travel may well have changed as we move forward. So, I genuinely believe, from watching what we've seen overseas, there is a real demand from people to have cars whilst they don't feel safe on public transport and they want their own little private bubble to travel around in. I genuinely believe there's a whole raft of consumers that previously would have done without a car who now want one. And that is real demand that potentially might continue right up until we get a vaccine. That means that we can all sort of wave this this particular virus goodbye.
Yeah. I mean, talking on about new vehicle supply, and we're talking briefly before we started to record, but what are you hearing about new vehicle supply in terms of existing stock? What that looking like? What's the impact in terms of timeline of orders and things like this? I mean, there's obviously, in today, and there's been a media release that's come out through the FT talking about that, the European car plants reopen, but with output well below capacity, and they do cite things like Nissan around their sort of up and running at Sunderland, but through one line only, operating on a single shift. They talk about JLR down at Castle Bromwich, not up and operational as yet. So, and various, the site obviously various other manufacturers there across the European market. But what's your view in terms of vehicle supply? Because there's a balance of vehicles on the ground pre-lockdown, and then the challenges around efficiency of supply.
Yeah, I mean, I think there's certainly plenty of physical cars in the country. There's a lot of cars that were brought in for the end of March, and there was cars that were already on their way to us that had been built pre any of the lockdowns. But you're right, the car plants are assessing the current level of demand and the level of stock that they've got in the system, and are being very cautious about how many additional cars they're making. And we were talking again before the podcast and we started recording. In Germany, we've seen increasing demand on the back of an increased electric car grant for the electric vehicles, but those orders are being pumped out to 2021. The brands are in no rush to ramp up production now. They obviously already think that they can hit their CO2 targets from the EU, and so they're being cautious about the additional production that we're doing now and moving those cars forward. And I'm pretty sure we'll see that in the UK as well. It'll be very model specific and as to what the sort of supply level is. I mean, we may even move to a world more akin to the US, where people are selling in the short term out of stock. So it's like, well, you can have one of these that I've got, or one of these that I can see in the pipeline that's physical. If you're looking at an order, then we're looking at significantly further down the line.
And talking about scrappage, we can't obviously talk about new cars without sort of raising the question around scrappage. And there's been a lot of headlines, and so again, with Curtis and I spoke about it briefly on the Saturday podcast. But a lot of conversations around scrappage, a lot of debate around whether it's new, used, whether it should be on EV, on the green agenda. And now the latest is obviously around the VAT reduction rather than specific to the automotive sector as a whole. What's your take on scrappage? Do you think something will happen? Do you think it's the right thing to do? Has the government got the funds to be able to support something specific to the automotive sector, or otherwise?
I mean, there's a lot of pressure that the trade bodies, the automotive trade bodies, have been trying to put on the government to do something, given the number of people that we employ and how important an industry it is. So there was a lot of requests and sort of press around the request for a scrappage scheme. The problem they've got is if they follow Germany and go with an enhanced EV grant, we don't really make those cars in this country, so it doesn't help manufacturing. It would help retailing, but it doesn't help manufacturing. The cars that we manufacture here, that in theory they'd want to support, don't necessarily fit with their green agenda, and so I think they're sort of stuck on that one. Certainly from reading the press, etc., at the weekend, all the talk was around a VAT reduction. And not really around a scrappage scheme. Now, a VAT reduction, obviously, it would help, with new car pricing. With a lot of used, if we're on the margin scheme, the actual price differential for the customer would be marginal, and that's assuming that people pass it on anyway. The one thing it would do is anything that can be used to stimulate the economy and generate a feel-good factor is clearly good for people going out buying cars, whether they're new or used. So, I mean, I think in the wider scheme, the bigger thing that would be liable to move the price would be an increase in brand incentives, as they're looking to, the OEMs are looking to shift their vehicles, and we've seen that quite extensively, particularly over in China, where there's been quite a lot of money thrown at the market to deliver the increase in volumes that they've been reporting.
Mike, does the lack of clarity over how new and used sales will actually play out, do you think that increases the importance of after sales for dealer owners and managers?
Yeah, I mean, we've always been. I mean, we've talked about it before. I'm always very much pushing the after sales contribution and effectively paying the bills for the building through after sales, and it is and remains massively important. It's as close as the motor trade can get to a regular income stream. Particularly if we've got people signed up for service plans. So after sales is really really important, or after sales and used cars, sort of discretionary used cars, where we've gone out to buy them and then we're selling them, is really, really important to retailers. And we need to keep the education going, because most of the people who own businesses and manage them tend to have come through the vehicle sales route. That's the way that the trade tends to work, and after sales can sometimes be seen as a little bit of the dark arts, and sometimes we don't get anywhere near the performance we should do out of a service department. They can frequently tend to coast, and I know a lot of businesses are working at how they can drive that to improve the overall performance, because we're going to need to look at managing costs, but also generating all the income that we can as we go through the sort of next 12-18 months.
And do you think there will be a change of attitude towards after sales and giving it more focus? Because as you said, that is the sort of dependable revenue stream.
Yeah, I mean, I think we're already seeing it with some of the dealership closures, mothballing, etc., that people are slowly working more towards the sort of hub and spoke, big shiny dealership in the middle, and then sort of after sales operations around the side. And I can, that was already a trend that I was predicting. I think that we probably pressed the accelerator on it, so it's going to happen quicker than I was originally thinking as a result of the crisis that we've been through. And I can see lots of people looking at, right, fine, well, how do we structure our market representation based on the number of vehicles that we've got at the moment and how the customer wants to interact with us? Some of the facilities we've got, okay, we need to pay for the buildings that we've got that we can't get out of. But most businesses that I'm speaking to, I'm working with them on, right, fine, well, what do you need and where do you need it? And after sales is a key part of that, as to how we deliver profit for the overall business.
Yeah, and I mean, just on that, my background was as you spoke about, really. I mean, it was that through the sales, but luckily I had a very good mentors that really focused me on that parts and service, the after sales market, because once you get to your overhead absorption and start covering your monthly costs through the after sales, then you can then start putting your profit through your sales department, and it was a key area that I was very quickly trained to focus on within my previous career. So I can agree with that one, Mike. Yes, 100%. But I mean, thinking ahead, I think, as you say, the businesses are back up and running. Costs are now starting to come in, as you've mentioned, and there is this, the flexible furlough now, as they're now calling it, and there's all these things going on. But thinking ahead, as we sort of approach Q3, Q4, what advice can you give to those listening today, for preparing, budgeting and managing themselves through the sort of final couple of quarters of 2020?
I mean, I think the first thing is to actually properly prepare budgets and cash flows. I mean, the trade hasn't been brilliant at it historically, and we've almost sort of got by and only done things when it's been demanded by the banks. I think it's vital for people to know what's coming. I mean, we've seen particularly with the unwind of many businesses' fleet positions, that's actually produced a cash flow benefit for them. As that starts to ramp back up in whatever period of time it does, that will be a cash flow drain. We're obviously, as you mentioned, we're now starting to pay rent. Most people, landlords will quite rightly say, well, hold on a minute, you're open now, come on. I want you to start paying the rent. The government's sort of VAT deferral is now stopped, so we're starting to pay all those different things, and people need to make sure that there are no surprises. So, I mean, I'm very much a fan of spending a bit of time and actually producing something that's meaningful. I mean, budgets and cash flows, they're always going to be wrong. And you can't get them. You can't perfectly predict the future. But if you know what's coming at you, then you can flex and you can react a lot faster and a lot smarter when things do happen. If we do need to go for if people haven't applied for a government CBIL or syllable, then we've sort of got until the end of September really to start the process, because the overall submissions need to be made and payments need to be out by October. So we've got a little bit of time to look at it and decide whether our worst case scenario that we might have factored in there is happening, whether we're outperforming our worst case scenario, what that means to our cash flow, and really get us set for the next sort of 12 months, 2 years using the scheme that's out there. And the other thing with regards to advising people at the moment is really watching the customer and really watching the customer metrics. How do people want to be dealt with? Making sure that we are communicating with them in the right way, because I think undoubtedly the crisis has changed people's digital adoption. And effectively, to my mind, put the fast forward button on that as well. So, even older generations now have got perfectly adept at using Zoom if they wanted to speak to their grandkids. So we're going to see a different customer as we come out of this. And I think it's the businesses that can really grasp hold of how the customer wants to be dealt with and how they want to be made to feel special, and how they want their transaction to go based on their personal level of risk and how they see things. I think it's the businesses who really get hold of that are going to thrive as we come through.
And finally, Mike, what's your view on the short, medium, and long-term health of the sector?
I'm a passionate believer that the motor retail sector is a brilliant business. And the variety of different income streams that we have within it enable us to cope with crises like the one that we're currently going through. As we've seen through previous recessions, the after sales used cars, new car sort of balance is very much an asset to the sector. Having said that, I think we're going to have some change. I think we're going to have some change with regards to the physical buildings that we've got. We're going to evolve into how the customer wants to be dealt with, and so coming out the far side, we've still got the motor retailers being used as the route to get the cars to the customer. The customer seems to want the interaction with the dealer. The brands want it because it enables them to get the cars processed as a sale and off their balance sheet. I think we're going to see some continued restructuring. I'm already starting to see people contacting me with regards to looking to buy or looking to sell. So I think we're going to see quite a bit more transaction activity once we find out where we're at this particular moment in time, and people get an idea as to what the overall health of the economy is like. I think we're going to see more transactions, and I think we're going to see a changing of the dealership landscape. So we will see more hub and spoke, and the people that are still in it will make a healthy return out of it, and it will be a thriving sector because, as I said, the brands want it and the customers want it. And whilst the dealers can continue doing a great job for the customer and adding value to the customer experience, particularly as we move to electric, then I think they've got a great opportunity in the sector. We may well, though, have a little bit of a bump if we go into any form of recession. Or significant recession with mass redundancies as we go through Q3, Q4. We're going to have to concentrate on used cars and after sales to get through that, as we have with every other recession we've been through.
I mean, great insight as always there, Mike, and I think you're right. I think talking around the new landscape, it's going to be, as everybody's referring to, a new norm, and there is going to be lots of learnings, lots of things for people to understand, and as you said right at the start, there is unfortunately going to be casualties along the way, but as you just alluded to there, we're potentially going to see a little bit more sort of M&A activity through UK, Europe, international markets, but potentially, that was always a trend that was appearing pre-COVID, wasn't it? And this has potentially accelerated some of that trend. But hopefully they'll be healthier with an increased throughput for the businesses on the back end of it. But by the sounds of it, we just need to keep one eye on today. Maximise opportunities that present themselves today as we sort of come out of the lockdown, but actually start to think ahead of that Q3, Q4 and really start to plan and think about what's sort of on the horizon. So I think that's some great insight as always from you there, Mike, and much appreciated.
No problem at all. No, I think if you look at the wider trends, there's only ride sharing's taken a bit of a pause as we've gone through this. That's got a backward step. People don't want to be in cars together and they don't want to share much as we've gone through the crisis. But a lot of the other wider trends have been accelerated. So it's going to be an exciting time to be in the trade. There's going to be so much. There was already going to be a huge amount of change over a 10-year period. And I think that's basically just been accelerated. So now it's going to be an exciting and dynamic time, I'm sure.
Yeah, Mike, many thanks for joining us. Really appreciate it. It's an important time for car dealers as they take their first tentative steps out of lockdown. So thanks for joining us today. Unfortunately, that's all we've got time for. You've been listening to this special Motor Trade Radio podcast brought to you in association with eBay Motors Group. Please like and share on social media, as it's important during these times for the dealer community to work together and share experiences and best practices. Many thanks to you for listening and supporting the podcast. Philip and I will be back with the industry headlines on Saturday, but do watch out for more special podcast interviews as we work our way through this crisis. Until next time, stay safe and stay well.